I truly believe in Bitcoin, and I believe it's the digital gold of the future. Being a trader, you can be short-term bearish, but still take longs, and you can be long-term bullish and still take shorts. Like, it doesn't matter. Understand that, again, charts are replications of humans trading via emotion. It starts to make sense. Emotion, greed, and fear. That the hype out there is real, but it is not something you want to get caught up in.
Hello and welcome to Crypto Street. In this video, we are privileged to have Gareth Soloway, who will provide valuable insights into the AI bubble and the crypto struggle. Today, we will explore the secrets of the future of Bitcoin. However, before we delve into our discussion, let's first examine the recent developments in the cryptocurrency market. It appears that the current equilibrium, characterized by extremely low volatility and narrow trading ranges, is on the verge of being disrupted. Now, without further ado, let's begin our enlightening discussion with Gareth Soloway.
Now, one of the things, and I always tie crypto to stocks, is because they are risk assets. We know that, right? Eventually, I truly believe in Bitcoin, and I believe it's the digital gold of the future. But right now, it's not. And I say this all the time, is that it started in 2009, we're in 2023. It is a 14-year-old, right? Are 14-year-olds logical? Are they digital gold? Are they like the place you run to for safety? No. They're adolescents. They're off the wall. They're volatile. They're risk assets. That's what you have here. Now, if we look at this chart, Bitcoin topped in 2017 on December 17th. 4 to 6 weeks later, the stock market, the S&P topped. Okay? So right there, that's number one. Now, let's go to this chart. In 2021, on November 10th, Bitcoin topped. 4 to 6 weeks later, the S&P topped as well. All right, boom. So you guys are starting to see a theme. And this is, by the way, this is what real technicians do. They look at the nuances of the chart. They find similarities. And one of the things that us as pros do, we don't put all our eggs in one basket. It's just because of this, it doesn't make me say, oh, well, you know, Bitcoin topped 4 to 6 weeks ago, so it 100% has to be. But what it does is it tells me probabilities. Right? Probabilities are everything here, guys. So what we're going to do now, I want to just show you this. We're going to go to the Bitcoin chart, and I'll analyze it obviously shortly, and we're going to go to some other charts. But here's your Bitcoin daily chart. All right? In mid-April, we made the high. Okay? Now, where is the S&P 500? Let's look at the SPX here. The SPX, short term, possibly just made a high 4 to 6 weeks later. We're going to find out, obviously, over the next couple weeks if that's the case. If this follows the Bitcoin model, we're going to obviously keep an eye on that. But I just wanted to show you that is that there are these trends. There are these similarities between cycles. The reason, by the way, so the reason why these cycles work and they generally, if not repeat, they rhyme, is because do you know who's trading all of this stuff? People. Emotion, greed, and fear. So the greed and fear, the greed that was in the dot-com bubble in 99 was the same greed emotion that was in 2007 and the same greed emotion in 2021. So if you understand that, again, charts are replications of humans trading via emotion, it starts to make sense why history tends to rhyme, if not repeat.
Bitcoin's price experienced a decline below $27,000 on May 31st, indicating a prevailing weakness that persisted into the monthly close. As the excitement from early in the week faded, both traders and analysts cautioned that the current moment was crucial for the short-term trend. Despite signs of recovery in Q1 of this year and a transformation in on-chain metrics suggesting a potential long-term bottom for Bitcoin's price following the bear market of 2022, doubts have resurfaced as price action has stagnated since mid-March. These doubts are accompanied by downside targets that extend toward the $20,000 level. As liquidity consolidates within the range, volatility is expected to dampen heading into the monthly close. However, the diminishing bid liquidity poses a greater concern for the bulls. Michael van de Poppe, founder and CEO of trading firm 8, summarized the situation by stating that if the current support zone holds and Bitcoin manages to reclaim $27,500, an upward trend is likely to continue. Conversely, a drop below $26,600 could potentially lead to new lows. The market's response in the coming days will be critical in determining the short-term trajectory for Bitcoin.
And again, just for anyone who's been out of the loop, McCarthy and Biden came out and they basically said we have a decision on or an agreement on the debt ceiling. It still has to be voted on by Congress, by the Senate, by the House, but ultimately it's expected to pass. Next up, we're going to go back to Bitcoin. I just want to give you guys your update on Bitcoin here. Bitcoin, again, you guys know I've been steadfast. I think personally 30,500 is the short-term top. I still am not convinced we're out of the bear market yet. I think that people that say we're out of the bear market are slightly jaded by hopes and dreams. I look at the charts. As long as we haven't taken out 30,500 and stayed above it, I'm in the camp that this is still going to come back down. All right, we did fall back there. We fell below it, okay? Now, notice how as we broke down over the weekend, number one, volume was light. Number two, it was a risk-on period because of the AI bubble and the AI craze. We went right back to that trend line on the charts, and then we pulled back here. Now, again, what I'm watching for is, do we take out 25,870? That is the lowest point in the last couple weeks. Two hits, one here and one here, okay? If we take that out, then you drop likely down just below 24,000. 24,000 is your short-term target. Now, let's be clear. I'm a trader, all right? I have a short signal out in verified investing crypto. With Bitcoin, we're in the money. We're in the money on the Ethereum short. I would probably be covering my short right in this area, okay? I might even flip it to a long for a quick trade. But a reminder out there, I'm telling you again what I likely will do, and number two is that I'm a short-term trader. So if I do decide to go long around 23,500, 23,007, then I would look for a bounce and I would exit. Because again, being a trader, you can be short-term bearish, but still take longs, and you can be long-term bullish and still take shorts. Like, it doesn't matter. You're trading the levels. You're trading probabilities. And by the way, the most freeing thing in the world is to trade inside of bigger cycles. So many people are like, oh, I'm only long or this or that. Okay, I'm okay with that. Again, especially for people that can't study charts, but there is a wealth of information that the charts give you that essentially can help you make money in bull markets, in bear markets, even when you're going counter trend, even going long in a bear market, even going short in a bull market.
In 2023, the digital asset market has demonstrated superior performance compared to major commodities. However, all markets are currently undergoing a significant correction. Bitcoin in particular has made a remarkable recovery from the depths of the 2022 bear market and now finds itself in a state of equilibrium, lacking clear direction. Trader Skew pointed out in his tweet that spot buy liquidity on the prominent global exchange Binance has been exhausted, raising the need for a reversal to avoid a retest of the 200-week moving average, MA, which previously served as a support level slightly above $26,000. This had functioned as earlier support at just above $26,000. Skew further emphasized that BTC USD is currently testing multiple exponential moving averages, MAs, on the daily chart, a development of considerable importance for the market.
Now, if you looked at the markets yesterday, we opened higher and then we kind of sold off. Tech was strong. Why? Because of the AI insanity. And talk about insanity, folks. And I want you to use this to start to shape your minds to avoid the hype. All right. Now, what I mean by that is that if you look back at past periods where there was insanity in the markets and you were seeing stocks going up 50, 100, 200, 300%, if you bought towards the higher end after they had already rallied, 9 out of 10, maybe 99 out of 100 people ended up losing money. So in this AI craze, if you look at something like NVIDIA, it's up from $100 to over $400. Think about that. Yes, AI is sexy. It's important. It's going to be game-changing. But you know what else was game-changing? The dot-com revolution, the internet. And if you go back to 1999, think about what happened there. All these stocks ran up hundreds of percentage points, and then I would say at least half of them went out of business. In addition, a bunch of them got acquired for pennies on the dollar, and then some survived, but their prices got cut by 90% before they moved higher. Example, Amazon. Amazon was a great example of this, where you ultimately had it dropping 90+% from its highs in the dot-com era down to like $6, and then it proceeded to go much, much higher, gaining thousands of percentage points. So my point is this, is that the hype out there is real, but it is not something you want to get caught up in. Sit on the sidelines. Let this stuff flush out. It will come in. In fact,
Thank you for watching. We appreciate your support and engagement. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.